Hi, this is Ernest Rolfson, the CEO and founder of Finexio. Welcome to B2B Cash Flow Conversations, the podcast dedicated to sharing insights and innovations in business to business payments, working capital and cash flow management, and fintech entrepreneurship. In each episode, my guest and I tackle questions in the ever evolving world of fintech and payments, an industry that's rapidly evolving and of great interest to investors and businesses alike. Looking forward to having this conversation. So today we're meeting with Dan Geraty, the founder and chairman of Clearent, a full-service payments processor and merchant services provider. Dan has over 30 years experience in the payments and software industries and was named Entrepreneur of the Year in 2017 by Ernst & Young. He's been credited with Clearent's unprecedented growth since his launch in 2005. Good to be with you, man.
Thanks for having me on, Ernest. It's good to be here.
How you doing?
I'm great. Spring is in the air. Vaccines are in the air. Things are looking up.
I was going to say there's still virus in the air as well. The vaccine in the air is countering the virus in the air.
Let's hope so.
Where do our friends and listeners find you today?
I live in St. Louis, so that's where I am today. I look forward to spending more time traveling around.
Right.
Again, as we're starting to come out of it.
Yes. St. Louis isn't necessarily known as a payments hub. Is that correct, or
I think that's a fair statement. Yeah. I mean, MasterCard does have a big facility here, as I'm sure
that is correct.
It's mostly a big data center, but they have, I don't know, maybe a few hundred people or more out here. But no, you're right. It's not really a payments hub, except that Square came out of St. Louis.
Also,
Jack Dorsey's a St. Louis native. Jim McKelvey still lives in St. Louis. At least so we've got some payments in our DNA.
Absolutely. So how did the idea for Clearent come about? And were you in St. Louis at the time and decided to build the company there?
I wasn't really. Actually, I had been working in a telecom software company in New Jersey, of all places. But I'm from St. Louis, and we had sold the company, the telco company, to Cisco Systems, and so I had some time to think about what to do next, and I was networking in different places around the country. But I grew up in St. Louis. I still have 5 siblings that live here and a bunch of nieces and nephews, so it's definitely home for us. And I was fortunate to meet a group of people who had been in the payment space. I really didn't know anything about payments. I just thought Visa and MasterCard did everything. I didn't know how large the ecosystem was. And so I met folks like a gentleman named Norm Tice, who was on our board and was an investor. He had been on the MasterCard board for 17 years. And, he introduced me to payments and the payments ecosystem. And we met some technology folks who had built one of the first payments gateways, and they were out of St. Louis. And so just through networking, got to know people in the payment space and got to know more and more about the payment space. And I found it really, really interesting. And as you know, back in 2005, when we started, there really wasn't much innovation in payments, especially on the merchant side. It was really considered a cash cow. A lot of the processors were bank owned, and there wasn't really much new investment going on. And that's really why we saw an opportunity to jump in and build a new and much better platform than what was out there for folks at the time.
Got it. The more we talk, the more it sounds like St. Louis is a payments. Actually, we got it wrong.
Yeah. Well, I guess you're probably. I mean, there are a lot of payments folks here. And on my board, I had a St. Louisan who was the CFO at Payment Tech. I mentioned Norm, and then we attracted other folks from outside of St. Louis to the board as well.
Got it. Taking a step back, how would you describe Clearent as a business, or how would you describe it today? Maybe for folks that aren't necessarily familiar.
Yeah, sure. I mean, we're the merchant acquirer, so we stand between merchants or card acceptors on the one side and Visa and MasterCard on the other side, and we move around all the data and the money associated with credit and debit card transactions. So when you go in and you swipe your card at a restaurant, you get this authorization that transits our network, goes to Visa and MasterCard to determine whether the card is good. And then you get this authorization, your transaction goes through. At the end of the night, all those transactions are batched up. They come to us. And basically through a settlement process, we make sure that the merchant, the restaurant, gets their money, but then everybody along the chain as well gets their slice of that transaction. So that all comes down to Clearent to do that.
Was there?
So we do that now for about 60,000 customers.
Got it. Was there, when you were getting into this, was there a specific problem that you were solving, or was it more like there's a lot of white space here?
Yeah, I mean, it's just, as you know, payments, especially, as they continue to become electronified. I mean, it's just kind of amazing that this is still going on after, Visa and MasterCard have been in the market for 50 plus years. And there are still plenty of cash transactions, plenty of check transactions that can be turned into an electronic transaction for the benefit of almost everybody involved in the ecosystem. So it is a giant market, but again, what we saw was just a lack of innovation. I mean, it was, again, the folks who do what we do were almost all bank owned or big companies that were not investing in their platforms, and the customer experience as a result was generally terrible. I mean, you wouldn't find anybody that said they love their merchant acquirer or their processing partner. So that's why we really thought there was an opportunity to build a better platform. Both for the benefit of our own salespeople, our channel partners, and of course for the merchants that we worked with.
Got it. I want to ask how things are kind of different now than when you started, but you kind of just touched on something. It was like, I wasn't around these days, but when merchant acquiring or credit card processing first came out, it was actually seen in some respects as kind of helping the merchant, right? Helping accelerate receivables, helping increase ticket size. And now over the years, maybe that delight of the customer has dwindled, and it's now seen as a commodity in some respects. And it's about, well, how cheap can you give it to me? And seen as, okay, I don't want to pay a fee for taking the card. And now discounting heavily all of those other benefits you touched on around eliminating the paper and the waste and the inefficiency. Right. So I guess around that, like, how is selling credit card processing, merchant services, merchant acquiring, how is it different now back when you started? Because I think there are some pretty fundamental changes.
Yeah, for sure there are. I mean, a lot of what was happening and when we started back in the early 2000s was simply, it was all terminal based. Even in a restaurant there was a terminal in the back that somebody was swiping the card. And now it's much more about integrations with software. It's about I think it was actually Jack Dorsey who said it, but if he didn't, he should have. That really payments should disappear into the background. The transaction shouldn't be about the payment. The payment should just happen without people thinking about it. So while that sounds easy, there's a ton of sort of changes in mindset, changes in the technology to enable that. It is, as you say, that if you're just out there trying to sell a terminal where somebody already has a terminal, it is a commodity and it's hard to win. We try to win based on service and a better platform, et cetera. But it's really this acceleration towards payments disappearing into the background that's really driving a lot of the innovation and making it easier on the merchant, so that the fact that they have to pay for card acceptance, they see more value out of it as a result.
What we say here in terms of paying with card, when we get asked that question, why would people take the card? It's like, well, they're willing to pay for it if they see value in it. If it's solving a problem for them, they're gonna pay, right? I mean, it's like, what is free in life? Right. I mean,
well, not only that, but
you got to pay for nice things.
There's an expectation on the part of their customers that they're going to be able to pay with card. And so, if you're in the business of delighting your customers, you're not going to end that experience when they go to pay and say, well, you know what, we only take cash or check. That's just not, that's not what your customers want to do. And particularly even now in the pandemic, you see this acceleration towards electronic payments. Even less cash has been used over the last year and a half than historically. So, yeah. Yeah, and you have to consider, both sides of the transaction when you think about whether or not, there's a value proposition in payments. It's not just that the merchant sees value in allowing people to pay with the card. It's what you and I see when we use our cards, right? So some people are all about their points.
And in some
Some
respects, how
people
we
are all
feel.
about, yeah, true, true. Like chargeback protection doesn't really exist if you pay with cash, right? So, there's value on both sides of the equation. And cards are here for a long time to come.
Yeah, I think it's moving as the industry is investing. You much mentioned on the software integrations. So much more emphasis is now being created on that experiential factor, and it's the wow factor. Whether it's the Goldman Apple Card, which is this beautiful
Hmm.
virtual card,
Hmm.
dynamic thing, or even I bought a pair of slip. I've got a hole in my slippers,
Oh no.
and so I bought a new. I've got these Italian wool slippers. They're these luxury wool slippers. I bought them Facebook ads and all e-commerce, right? And now I've worn them till
Yeah.
these are expensive slippers. I'm wearing them till they're literally falling apart. I want to get my last dollar of value out of these slippers, so I had to give in today, and it's all Google Pay plugged right in, and
Yeah.
it's like it's
Yeah.
2 clicks. It's beautiful. You don't
Yeah.
have to do anything,
Disappears.
and it's like it's
Yeah.
awesome, and you
Well,
feel
now we
good
all
about
know
it.
what shoes you're wearing
I'm
on your Zoom
wearing I
calls.
am wearing slippers. I'm wearing Italian wool slippers, handmade in Portugal,
Wow.
with a hole by the pinky toe, and I've got a bunch
Can't
of
you just put some duct
I
tape
can
over
put a
that?
bunch, yeah, there's a bunch of mulch in them because my dog went crazy yesterday. I got a bunch of mulch in my slippers, so I'm wearing my Finexio branded T-shirt. I don't know if you can see that here,
Nice.
and
Yeah. Nice.
very fancy slippers. I am wearing shorts as well, just
Yeah.
round it out. Yeah.
Yeah. Yeah.
Great, great. So, well, we can kind of, I think from here, because you mentioned the software, you mentioned the integration. You've been, buying or investing in different businesses there. Are there any software specific, or have you have those the strategy around this had implications around an integrated software approach around selling and delivering payment services to whether it's a business or consumer?
So you mean at
Yeah.
Clearent
Yes.
or the acquisitions
Yeah.
we've done of
Exactly. Yeah.
software?
Yeah.
Yeah. Yeah. Yeah. I mean, we um, we're eager to partner with software developers, to enable payments as part of their value prop, which is, great for them because they get this additional revenue stream in payments. Also good for their customers because the experience of payments is much more seamless. And so we've been partnering with software companies for a long time, to again enable payments for them. And back in 2017, we came across or met a company called Spot of, in all things, dry cleaning store management software, right? Super sexy. But the idea was that almost everybody pays for their dry cleaning with a credit card. And we liked the space, and we liked these guys because they were the dominant player in their space. The founders were ready to retire, and this intersection of payments and software, we still believe is a tremendous opportunity because software makes payments stickier because software is so sticky, right? So we acquired Spot, and we moved their customers to Clearent for payments, which was a much better solution for their customers, by the way. And so we were able to pick up revenue synergies associated with payments as part of the revenue stream, but we were also able to really improve their business and improve the experience for their customers. And that transaction went so well that we realized that as we go out to partner with software companies from time to time, there'll be verticals that we really like where we want to acquire a company as a platform. And so we've done that in other vertical markets as well. And now I don't know if you did you see the announcement of the merger with TSG and the creation of Explore, which I think when the announcement went out about a month ago.
No. No.
So TSG was also an Advent-backed company out of the UK, Australia, and New Zealand, and they follow a similar strategy to Clearent. They own a number of software companies in verticals like childcare and health and fitness. And so the two companies are coming together, and the new name is Explore, XPLOR. And so we're going to continue that strategy. We now have, a global platform to continue that strategy of acquiring software companies in verticals that we really like, in addition to partnering with software companies, that we don't own, but that we can improve their payment experience.
I did see this, but it looks like there's now a whole detailed strategy out there in a release. So there's some specific verticals that you guys really like. It turns out.
Yeah. Yeah.
Is that because
There are.
these verticals are reliant on some specific software to help run their businesses that you think payments fits nicely into?
Yeah, we like to buy platform companies where the software is mission critical. So, the first one I mentioned, Spot. I mean, you run your entire dry cleaning operation.
You can't run the dry cleaning if you don't have the software, and if you run the dry cleaning operation, you need payments. Payments comes with the software. Turns out you bought payments software, you didn't even know it.
Yeah, bingo. And then, we like other verticals. So we've acquired a couple of companies in the field services space, right? So think about companies that have 10 to 50 trucks on the road servicing HVAC customers. We really like that one because it's there's a lot of white space for the software. A lot of those folks use Excel and Google spreadsheets and things like that to do their scheduling.
Clipboard.
It's really efficient. So yeah, big opportunity for software further penetration into the market. And the other thing that was happening at the same time is the white space around payments. It used to be all those guys would bill you 30 days after they came to fix your HVAC. Now they have a tablet, and after they finish, they want you to give them a credit card right at your door, right at the point of service. And so a big white space around payments that's expanding really quickly as more and more of the field services folks expect to be paid by card and expect to be paid when they do the service.
Got it. So they're actually these folks are walking up. They've got a tablet of some sort with their scheduling software and billing software. Now they're able to just turn around and give it to the consumer, right, and just swipe their card in the tablet. Is that the kind of experience we're talking about here?
Yeah. And the software is much more rich than sort of a point of sale. I mean, it does, truck routing and scheduling, matching technicians with jobs, et cetera, et cetera. So it's mission critical to the field service solution provider.
Got it. I mean, is this the biggest change in the landscape, you would say, since you've started? I mean, did you see this kind of trend coming? I don't know if you thought you'd be in the business of buying and owning vertical specific software businesses and the like. I mean, right.
I wish I could tell you I had that much forethought back in 2005, but no, we didn't anticipate this, but you could see it starting to happen, right? Back with, OpenEdge was one of the first companies, if you remember them, that Global bought, where they were doing a lot of integrations with software companies and growing like a weed as a result. And you can't help but take notice as, in the merchant acquiring space, attrition is just a challenge, right?
Yeah.
Unless you've got a real hook, and the software is the hook. And that software is even more of a hook when you own it.
Right. Just for listeners too that may be familiar with a company like a Stripe or something like that, like how is maybe what you're doing different than that? It seems like it's in the general trend area of having credit card processing available to developers. You can embed into the software. What kind of?
Yeah, I mean, Stripe's a terrific company. They've done a great job of making it really simple for people to integrate payments into their software solution. What we find is that Stripe it's a little bit more of a one size fits all kind of a solution. And while software developers, when they're smaller, Stripe is like kind of the go-to when you're just getting started. As the software company matures, as the business matures, we find a lot of them are looking for a different solution with more support for their customers, different pricing solutions or different pricing options. So, they're a terrific company, and they, seem like they're taking over the world with their valuation. Um, but it's a little bit like Square, where it's not a one size fits all. Not everybody can be a Square merchant when complexity starts to enter the equation.
Right. Okay. So it's everyone has its place or its specific focus,
Yeah,
essentially.
and the market is just gigantic, right? The global payments
It's
market is
stupidly
just
large.
huge.
It's stupidly
Yeah,
large.
it's
That's
stupidly
something
large.
that folks
Good
don't
for us,
understand.
right?
Absolutely, absolutely. I'm excited for now. Stripe has so much money now they can just start buying islands. They're going to have all the islands around Richard Branson. He's going to be like, here are all these
Yeah,
people that own these islands here.
yeah. Maybe that Red Bull Island
The
is back up for sale again.
Island, unbelievable. Um,
Right?
yeah, well, I see the same trends. You're not to talk up my book too much here, but it seems like the parallels that we're seeing in credit card processing and how the shift to getting the processing into the software. That's actually what I'm betting my entire company on is that CFOs are not going to be buying outbound payment processing anymore, outsourced check printing anymore, or having their back office staff be making payments over the phone with a credit card anymore. They're buying procurement software or AP software to run their business. And the expectation is they're pressing one button that says buy this good or service. And it's not only writing to the accounting software, but it's also making the payments for them. And it's an embedded part. And payments is pretty confusing and complicated. And right, pricing can be opaque.
Hmm.
That you've
For
seen
sure.
these interchange tables that grow with complexity every year. So I think it's easier to not engage with it. And if you can delight a customer or solve a business problem, it's actually very elegant to get the payments in there. Um, and once you're in, it's very hard to get pulled out, especially if you've got some kind of vertical integration or vertical focus or some series of vertical partnerships. Like your example with the laundromats, we're very heavy in the hospitality and higher education verticals, for
Hmm.
instance.
Yeah, yeah. Yeah, it seems like in B2B, it's what we have seen happen on the merchant acquiring side over the last 15 plus years is again this idea that you have to make it seamless, basically make payments disappear because people don't want to deal with payments. Like you said, they don't want to engage with payments; they just want it to work like a utility. And it's not easy to just make it
Right.
work, right?
It's
The
very it's
user
hard. It's actually the
experience.
complete opposite.
Right, right. That's totally right. So, again, people talk about payments and commoditization of payments. Well, again, if you're swapping out one clunky terminal for another clunky terminal, yeah, that's pretty much of a commodity sale. But if you can really delight your customers by making it so super simple for them and for their customers, that's real value.
Yep. Yep. Well, the grass seems to be always greener on the other side, doesn't it? Especially when you're swapping out one clunky. Not to disclose any kind of confidential info, but and going a bit off topic. I mean, around that point, I mean, when you think about, you've actually did become yourself a merchant acquirer, right? Not just an
That's right.
ISO or a super ISO. You actually
Yeah.
developed the
No, one of
you
our
developed the infrastructure. Um,
yeah.
so I think maybe it'd be interesting for you to mention about like when and how did you decide to make that investment? And it always seems to be like that feels like it could be a commodity piece. We're like, oh, I'll just change merchant acquirers or I'll just change processors. And I'd love to hear from you why you think that's not necessarily so easy or smart. And if you've got a partner in place, that's a pretty big undertaking making a switch and the risk and complexity and customer service. So I know I just threw a lot at you, but it's interesting because you did make that jump. And
Yeah.
that's not a common move, I would say, considering there's many thousands of credit card processing in ISOs in this country and growing, only so many very big ones, of which your company is one of the few very meaningful ones globally.
Yeah, so it's interesting that you would ask that because part of it is a little bit that we were not coming from the payments space. And, like a lot of entrepreneurs, we were like, well, we could build this back end settlement system in 6 months. It might cost us about $5 million. And I thought I was being really savvy when I said, well, we better just double that estimate because everything's harder than you think it is. So let's say it's going to take us a
That
year.
was probably
And
pretty astute, though, but you were probably still off by double that, right?
I was still off. Yeah, I needed to like quadruple it. Because it's like you said, it's complicated.
Yeah.
They're like 450 interchange rates, So,
Yeah.
but our strategy right from the beginning was to build the full stack, payments processor, because what we wanted was control, and we wanted control, partly for our own business because we wanted to control our cost structure,
Right.
but we also knew that if we didn't control the user experience, we didn't control the roadmap, we didn't control features, and we were subject to using one of the big mega platforms that's out there now,
Right.
then it'd be impossible to differentiate, right? You're just basically everybody's selling the same loaf of white bread because the backbone of what they're using is the same across all those different ISOs. So we built that processing platform right from the beginning. It's funny how many times I would go to an ETA and describe to people what we were doing, and they would just like shake their head like that's just not a good idea. It's a commodity. Why would you want to do that? It's not a good idea. But we really felt like, if you're going to differentiate yourself, the differentiation starts from the technology platform. So that's why we made that investment.
And I think this is a good lesson for the investors too. And you must have had great investors and board to see that vision, because it takes a massive investment and so much time to build something of real meaningful, like infrastructure-y type value in this space.
Yeah.
And most investors don't have the time horizon to be able to withstand that, because now years later, your company, I don't know that it's public, your company may be worth billions of dollars at this point, but it took a long time for you to get there. And building that was you probably had to go back to your investors multiple times and say, taking longer and more money than we thought. I'm not putting words in your mouth,
we
but
did for
that
sure.
Sounds like that's what happened.
Yeah, we did for sure. And we went back 5 different times, although we
painful.
were pretty capital efficient. I mean, we only raised like $25 million
only,
before we had institutional investment.
Yep.
But almost 100% of that money came from, individuals and family offices. So it wasn't until 2015 when FTV joined the cap table as a minority investor that we actually had real institutional money at the table. And there were pros and cons to that, as you might imagine. Like, you have a lot of individual investors, which, if you treat them right, is a great network for you. And that's how we felt. I mean, we had almost 100 people on our cap table, but I liked that process, even though it sounds unwieldy to have 100 people on your cap table.
I think we're about half that now, and I've been certainly gotten some criticism for doing it, but that's the way that you did it. But to your point, you foster some of those relationships. You work with people as advisors. You ask them for advice, and the strategy for me has been to try to find people like yourself that have done it before, that can not only give the counsel, but can also help. I think it's the ultimate smart money, right? People that have walked the same path in the same kind of shoes, versus that institution where they'll love you until they don't. Now, FTV are, blue chip, that they're top class. That's how me and you got to know each other through those guys. But they're probably the best investors you could get for your company.
They were for sure at that phase, because they're, they know all about payments and they're growth investors. And still, that was, we were very much looking for a growth equity partner at the time. But yeah, it's, I did have a really great group of investors. And as a result, we were able to have, I thought it was really important to have a real board, real governance, and have people on the board that understood the business. And so effectively, we ended up with 7 independent directors whose interests were all around the company. Not that it was divorced from their investment, but that were mostly about trying to solve the problems for the company. And so that worked out well for the beginning phases of Clearent.
These were truly out. Some of them were outsiders, truly, or were they on your cap table? But they would be willing.
They were on our cap table.
They were willing to serve,
minorities,
and had payments experience.
Exactly.
Yeah, no, that's great. I've done similar, and it's kind of cool that
Yeah.
we share even some of the same investors like David that had got involved with
Yeah.
you early on and involved with us early on too. So
Well, there's a lot of investors who've done very well in payments and are always looking for another good opportunity in payments.
absolutely, absolutely. So why don't we, since we're stumbled onto that track? I mean, you are an investor at Finexio and an advisor. I mean, what did you see here that you liked, and what thoughts do you have on B2B payments specifically that
Sure.
you might want to share?
Well, let's start with that with B2B, which is just that it's a gigantic market. It's just huge, and it's just at the early innings of becoming or moving to electronic payments. So love the size of the market. As we said, white space. I mean, we love the idea of white space and the opportunity to grow, and that there could be multiple winners in the space. It's by no means a winner take all kind of a market. Yeah, as you said, I've known you for quite some time. I don't know, but we went to an FTV conference together maybe 7 or 8 years ago, right? And I
They
know
let
that
me
you've
in.
spent.
I snuck into Napa. They tried to close off the valley, but they could not keep
Yeah,
me out. So I
like,
weaseled my
let me
way
get
in.
this straight. You're not a portfolio company, and you're not a limited, but they just let
They
you in,
let
which
me
was
in.
nice.
They liked me enough to let me in. I had a few interesting
Yeah.
things to say. Yeah.
Well, and I think that that's part of it, right? You have been living and breathing the B2B payment space for a good part of your career, and you've been championing Finexio for, I don't know, how long has it been now
Five
that you've
years.
been building the 5 years you've been building the company, right? As a result, you have a company and a platform that's 5 years mature, which is I like when to invest in that stage when there's a platform that's out there that has differentiation. And also, to return to another theme that we've talked about earlier, is just this idea of making payments simple. And the Finexio solution, I believe, is super simple, right? All of the AP people have to do is create that AP file and then give it to you. And like, what could be simpler for them than that? So love that the company is helping to speed the process of making B2B payments simple, seamless, and customer focused.
We started, with one of the ideas was let's just get um, the data in like a Excel file, like in a CSV. It's like we're like
Yeah,
every company can do that, from
right.
the shoe manufacturer to the real estate company to the law firm, and no IT, no problem, right? It's like, hey, can you get your back office worker, if you had to, generate some Excel file? And this is kind of when Dropbox or Box or Google Drive was kind of coming out, and we're like, file transfer is great, and we had this vision for integrating into procurement and AP software, but we said to start we have to make something where, to just take advantage of this, because we saw the barriers with banks having this arduous, crazy implementation process and 3 month cycle, 4 month cycle of getting somebody live and up and running. We're like, just be able to get the staff to move a CSV into a web page and start making
Right.
payments is a way to start. And so that we still have not seen that really replicated yet in B2B payments. The technology exists, so just that idea of how do you make it simple and how can you get adoption and traction. And I was thinking about how can we deliver payments where, again, 12 trillion checks, half of it's paper, 20,000 or so middle market companies that need this. How do you get your first few customers? How can you get some traction? How can you show some excitement to, right, get the investment to build that bigger, longer term investment to get into the software space that, to your point, takes longer and more expensive than you thought? But you can't go
Right.
to the biggest player in an industry and say, hey, take my processing solution and plug it into your software when there's no proof points. It doesn't
Yeah, but the
really
other
work,
nice thing, yeah, yeah. The other nice thing about your business is the demand side is clearly there. Like, they definitely want to offload this process. And again, you to a certain extent benefited from the pandemic in this too, to say, yeah, let's accelerate this move to having somebody else do the actual payments. We'll just deliver the file. And so from an investment standpoint, I think that the opportunity on your side to make everything simpler once you receive that file, to invest in the technology once you receive that file to make it all just work beautifully on your platform. That's the kind of investment that could be made, and you can just keep getting better and better. Now that you know the demand is for sure there on the part of the payors.
The demand is there. I mean, we've seen probably a 5 year, and I think this speaks to digital transformation generally. I think right now it's a great time to be a software company, even a better
Mm-hmm.
time to be a software company selling something to the CFO, where we've seen like
Right.
a 5 year acceleration of a push to digital transformation around outsourcing, payments processing, workflow automation software. We're
Yeah.
targeting all those factors in one, which is nice. And so I think that now that companies have had to work from home for so long and almost overnight go digital, that barrier of, oh, yeah, it's a priority, but, digitizing our payments isn't the top priority. It's so
Right.
much more obvious now for companies to go and do this, and they're looking for ways to. I hate to say it, companies did lay off people and reduce their footprint due to
Right.
COVID. So now they're like, how do I not go back to that old cost structure? How do I not hire people back? Others are just like, I like the efficiency we got working from home, being digital. How do we continue that?
Yeah.
So it's
Yeah.
been it's been pretty amazing.
It's Norm Tice, so again, gentleman that was on my board and was a lifetime banker on the Mastercard board for 17 years. Wonderful guy. He used to talk about when EDI was first, the technology was first invented. So it was back in the 1970s, and he said, I remember we were all in a boardroom, and we had managed to create this EDI solution, bank to bank, and somebody proudly proclaimed that this is the death of the check. And that was like in the 1970s. And it seems like it's just impossible to kill the check. But maybe we're starting to finally.
It is dying its slowest death. And there's somebody at Chase listening to this podcast, and they're in a check printing room someplace in the bowels of Chase, and they're just hanging on to make sure that they're the last person there. They're going to flip the light switch off. 30 years from now, they'll be in that room. There's that one light bulb, with the string. They're going to pull that string and close the door, and that'll be the end of the movie. But I think we've got a ways to go there. That person they're
Yeah.
probably in Ohio,
Yeah, of course.
knowing Chase's footprint. They're probably in some giant 100,000 square foot facility in Ohio that is.
Some bunker. Yeah.
Absolutely.
Well, that's great. That's the demographic that all the podcasters are after, Ernest. So,
I'd like that
you should
person.
raise the prices on your commercials.
I'd like he or she to be listening in, and they can write in and tell us what they're doing.
What we're wrong about.
Absolutely. No, it's crazy. Even digital check, e-check, is fairly slow to adopt. It's still gaining some ground. We've had a lot of success with that. We have a client. It's about a 200-year-old college called Amherst College up outside Massachusetts, and they had a very interesting COVID problem, which is that school is closed, and they've got heavy international student component, right? So now all of the Chinese students, well, those poor kids, they can't even go back to China. They've been stuck in random
Right.
places wherever you can find them. Other countries in Africa, kids in Europe, and at the college, they only had their dorm address. And so now they've got to refund tuition, they've got to refund room and board. They have no way to get them the money. And so first we thought, well, maybe we'd do some crazy international money transfer thing. These people are all overseas. We've got a partnership with Veeam, and they're a client of ours. We're really excited about that and our work with them. Marwan, their CEO, is going to be a guest here soon. And it turns out it was actually, although that's an awesome solution, probably overkill for this. What we realized was we had all the student emails. So we're like, can we just send them an e-check? We just send them a picture of a check digitally. And now they can have the freedom and wherewithal to deposit that wherever and however they want. So using the check, 21
Yeah, that's
technology
great.
and everything, but just kind of digitizing the check, a new form factor, that was a great way. And some of them, I'm sure, used PayPal to convert it. Some of them used something in their home country to convert it. And Little dicey there as we kind of figured this out, and there was high intensity by the school and college around helping get these students get their money, but interesting implementation and way to use some kind of newer tech to solve some old tech problem. And I realized that wasn't necessarily a B2B use case. We're a B2B company, but again, if you're embedded with a company, they like you, you're solving their problems, you've taken them from paper to digital. The next time they have a payments problem that pops up, they're not calling their bank. Who are they going to call at their bank that's going to help them with this, right?
Who are they going to call?
That's right. You're going to tell me next that movie was actually written and founded by a man in St. Louis. But I don't think that's the case on that one. St. Louis, the payments capital of the Midwest.
Yeah, coming to you live.
Absolutely. That's great. Now, good to share some of these war stories here. So
Agreed.
I wanted to just find out from you too. You were on the Inc. 5000 fastest growing companies for like 8 years in a row, and Nielsen report had you as one of the top U.S. merchant acquirers. I mean, what was the secret sauce here? You were EY Entrepreneur of the Year. What advice do you have, for people like me, others? A lot has to go in your favor, certainly. But this also doesn't seem accidental.
I mean, I wish I could tell you something that's going to be a surprise
profound,
to you. Really.
Something profound.
Yeah.
Tell me your secrets.
Sorry to say, it's what everybody else tells you. It's that you have to hire really great people. You have to give them an environment in which to be productive, where they want to work, where they, feel like solving problems together is a really rewarding experience. So culture is just, it's just incredibly important that you're building this idea that it's, we're in this doing something special together, and we're attracting as many smart people as we can to go solve problems. So there's nothing surprising about that. And then I really firmly believe on the power of a platform. So not only the platform that we built at Clearent, but when we go out to buy companies, we're looking at the power of their platform and the differentiation that the platform gives them. And so I think those were, two of the most important reasons for our success. We surrounded ourselves with good advisors, good board members, good partners. We certainly made mistakes along the way, and there are things we would do differently if we had it all over again. But love the team that we built, and firmly believe that it was that team and the people that got us to where we ended up.
Yeah, and you spoke heavily about your board and getting the right advisors and board members there as well. So I'm sure partly kind of avoiding some of the mistakes that they made in their past was probably something to it.
Do your best to never, like when you're hiring somebody, never settle for good enough. Always go and strive to find the best possible person that pays huge dividends.
Absolutely. We've seen that.
I think every entrepreneur has.
So let's just talk here about, you did eventually grow the company large enough to sell it or sell a majority piece. And now there's another combination here, an exit. But what was how did that investment that was with Advent, how did that change the company's trajectory? What did that free you up to do or think differently about how to grow the company? Was there a specific payments opportunity or growth opportunity you all saw together that you wanted to pursue?
Yeah, for sure. So as you know, Advent's probably been more successful in payments than any other private equity firm out there, creating, WorldPay. And then they've owned a lot of assets around the world in payments. So incredibly smart, talented group of people. And, we had done the Spot acquisition, saw that it worked well, and wanted to go out and buy additional companies. And so we just needed a sponsor that, could help us do that, both, operationally, as well as with deeper pockets. And so Advent's fund, their current fund, I think, is like $17 billion.
Just enough.
So
it turns out.
Yeah, just enough to go buy a few companies. And so bringing them to the table, brought all that expertise, all that knowledge, all that execution ability, and pretty fat checkbook. I shouldn't say checkbook, an electronic payments
It was a digital wallet,
platform.
an
It's a
e-wallet,
digital, exactly.
an
They
e-wallet.
use an e-wallet to buy companies. It's pretty impressive.
Got it. How do you think in terms of payments? It has been white hot. You've benefited from that. It's a
Hmm.
great time to be a seller right now. It's actually worst time to be a buyer and an investor. And you
True.
hear about the valuations we've seen, like in the B2B payment space. There's only just a few public names, right? Wex, FleetCor. An argument could be made about Coupa, Bill.com, Repay, soon to be
Hmm.
Avid Exchange will probably get a $10 billion valuation here. Just there's no way to really invest publicly in B2B payments. Some of these other areas in payments are a little bit more accessible. However, the prices are still very high. Valuations are pretty eye popping. Visa and MasterCard stock has gone through the roof. There's been a
Right.
big recovery in payments since COVID. There was an initial dip, and then actually people did reasonably well because of this shift you mentioned to e-commerce and this digital transformation shift we've been talking about, where probably more paper was eliminated due to COVID than business prospects being down due to reduced spending. Um, so
Right.
when you're making an investment, making an acquisition around payments, are you how concerned are you about the price you're paying versus the market fit and strategy? I'm sure it factors in, but just kind of curious about how you and some of the top minds in payments PE are thinking about investment strategy around this, just at a high level general terms.
Yeah, so we've tried to be very disciplined about it. I think what you're seeing these days is, software companies were the ones who used to talk about being valued on a multiple of revenue, and that seems to have crept into the payments
Yep,
sector as well, where people want to be valued on a multiple of
we
revenue.
sure do.
Um, once you get to, yeah, of course, everybody does, right? Um, Once you get to a certain scale, though, you're going to be valued by on a multiple of EBITDA. So we had to be really disciplined and continue to be disciplined about what we buy, because we have to be able to see, taking something that we might have to buy on a multiple of revenue, and being able to look out 12 to 18 months and know that on a synergized
Hmm.
EBITDA basis, it's going to be an accretive acquisition. So that does mean that the number of companies out there that are fit into those parameters is smaller. But you know, it's just the fact of where the market is these days.
Yep, that makes sense. Yeah, so it's almost like you can have a payments business. It's growing quickly. You don't have any earnings, but if you can show potential acquire that your platform or product fits nicely into their ecosystem and can drive
Hmm.
even more value, your odds of getting a deal done and having successful win-win outcome is a lot higher.
Yeah, and I think that in the in the high growth part of the world, everybody wants to know that your unit economics work. And if your unit economics work,
Yeah,
then hey, you know what? Let's just pour gas on the fire and build it up, and we'll be able to sell it, on a multiple of revenue, later on a
sure,
much bigger number. Yeah,
sure.
and so that actually makes it even more problematic to go out and buy things, because a lot of sponsors are still pushing for the kind of behavior where EBITDA is certainly a distant second priority to revenue growth.
Sure, sure. But you said it.
Valuation is so highly correlated to revenue growth these
Yeah,
days.
it's how much and rate of, right? I mean,
Right.
it's so important. But you touched on it. I mean, I think the days of the Uber valuations and some other names I can't think of right now, or you're just upside down on every transaction you do, or every sale you do, you're losing money. Those days are definitely over. And we are in this kind of rapid growth curve, which is exciting because I have a business that's like that, where we're making money on each transaction despite not being profitable overall. But if you can show the growth and show that there's a big path to upside here, you can keep building and
Yeah.
extending your reach, building out your
Right.
infrastructure.
Right. Yeah. And that you have good margin on every single transaction that you do.
Exactly. So,
Yeah.
so what's next for you? We talked a little bit about the future of Clearent and the go forward, but you personally, and also just the payments industry as a whole. I don't know if there's any predictions you want to make, but what are you kind of you personally excited about working on? What other big trends in payments are you fascinated by? You've mentioned risk and security around payments to me in the past, so I know you have an interest in that. But what are you kind of keeping your eye open towards, and where are you spending more of your time?
Yeah, so still involved in Clearent on the board, or I should say on board of Explorer, and so that's an interesting place to be. I've invested in 6 or 7 different, relatively early stage, about Finexio stage companies, some in payments, some in fintech more broadly, and I continue to think that things like uh, um, open banking is pretty exciting. I think real time payments is interesting because there are a lot of applications for that, which, where you're providing a totally new value proposition to the recipient. E-commerce still has so much room to grow, and I think that's a really interesting spot too. And of course, as you know, I think B2B is a great opportunity too. So payments, it's just such a great market. As we discussed, it's big. It grows every year, 68%,
Yeah, no
sort
matter
of
what.
like, clockwork. And it's just, if you're part of a market that's growing 68%, that's a tailwind to start with. That's just great for your business.
That's great. That makes a lot of sense. It just as a final, maybe some kind of final thoughts here. Any other advice? Maybe someone just trying to start up a payments company, a fintech company. You mentioned, you mentioned you made some mistakes, things you would have done differently. Any kind of ways you could kind of pay it forward here, or any kind of advice you'd even give your former self around how to get something going? We each have our own war stories about getting things going. You're
Yeah.
inarguably a lot more successful than I've been so far. Hope to be behind you one day.
Yeah, well, no, we're all rooting for you, Ernest. Obviously, I think that we've touched on a lot of the themes. I think that you have to find a place where, your moat. My just the way I think
Mhm.
about it is that what is the platform? What are you doing that's differently? How are you making payments kind of disappear? A lot of the things that we've talked about today are the things that somebody starting out in this space should have top of mind, if they're just getting into payments now, because there are really good competitors out there in almost every
It's getting
sector.
fiercer and fiercer,
So
right?
yeah, it really, and it's always been fierce. It's just always the fact that it's such a big market
Yeah,
and that customers keep moving from place to place to place, and so there's always an opportunity to pick up a customer from a
that's
competitor.
also true.
Yeah, but and then there's always the guys who are stranded on a legacy platform that aren't able to innovate, and so there's opportunity to innovate. So you know, I think there's still so many opportunities for entrepreneurship in the electronic payments ecosystem. You just have to be careful about where you pick your battles.
Sure, sure. Well, look, that was the list of questions slash general dialogue that we naturally stumbled into.
Yeah.
It's been
Well, it was good talking
a
with you.
delight here. Thanks for listening to B2B Cash Flow Conversations. This is Ernest Rolfson, the CEO and founder of Finexio. I welcome your questions and comments. You can reach me at podcast@finexio.com. You can also find us on Twitter at Finexio Payments. To subscribe, you can go to finexio.com/podcast. Be sure to check out my new episodes on Apple Podcasts, Spotify, or wherever else you listen to podcasts. Thanks, and talk with you again soon.